Thank you. So we wanted to have a time to, number one, again, thank our sponsor, TMAC, today. TMAC was our sole sponsor for this event. And when I talked to Brett about putting this on, told him what I wanted to do. I wanted to bring in Dan Hultquist and Wade Fow. And Tane came along later. I know he busted my chops earlier, which is fair, because he didn't have a lot of time to go through what he needed to go through today. And we didn't want to squeeze Tane in, but I was going to do anything I could to squeeze Tane in. Because I've seen that tool in real life now, and I don't even know how I did business before it. And you didn't get it justice today, but you will. Make sure you're on the blue door. Make sure you're going to pay attention to how to use that tool, because it is invaluable. It's something I will use going forward in all of my presentations personally. Now, I will tell you, I feel like this company right here, TMAC, is a partner with C2. We have a few of those here. I mean, we have lots of investors from the forward to the reverse side. You know, I really would say the same of some company like UWM. I feel like UWM is a partner with C2, don't you? Well, if you do reverses, you're going to feel the same about TMAC. They have our back. They help us. They help us get things done. They, have ways to help us get stuff done that maybe somebody else wouldn't do. I can tell you that for sure in the refi boom. When the refi boom comes, you will have TMAC on speed dial, because they see it very open-minded and very different than a lot of the industry. But I want to leave this for questions and answers, because we don't often get to ask somebody like the owner of the company questions about his company. And it'll be a little vulnerable. I think he might be a little nervous, because I got some tough questions for him. And then having their top AEs, our AE, Nathan Grant, and Jeff here, Jeff here. I'm so thankful to have guys that have been in this industry as long as Jeff and Nathan. I go to Nathan for everything. I'm going to tell you that right here. I've been doing this a while. I've closed a few loans. But I don't know much. I know that all the time, because I got to call Nathan and say, hey, what about this? And this guy knows the answer almost every time. And when he doesn't, he gets back to me with it. And Melissa would validate that. Now, Melissa Clymer is my right hand, my left hand, and both feet. I can't talk too much about her, because I love her. She completes me. And my wife will see this. And she knows that to be true. She really does. She loves you guys. If you haven't seen that, you haven't worked with Melissa yet. She works from here. So do I. That's why we're like birds of a feather flock together, right?
Yeah.
We met crying together. And we do it again. I used to close loans with a title company called First American Title in Idaho. And Melissa would cry with me at the closing tables as my clients' lives were changed. Hug me and hug them and be like, I want to just do this. I want to do what you do. And so she quit the title company and she came with me. And I can't thank you enough.
Yeah. Little purple-haired lady is what changed it all.
I told myself I'm not going to cry today. I made deals with God this morning. Here's the facts. We're going to open this up for questions for you guys to ask questions. So we have a couple microphones here. If you want to say them out loud, to be better if you can scream them at us, we'll read the question back. What questions, because I have some, if you're going to be crickets on me, don't be crickets. I know Dan Hultquist, he was going to ask some challenging stuff. Anybody in here, you have questions for Melissa, which is more processing stuff that we can do. I have her up here for this reason, for our RN, what we can control, C2 type questions, anything you can throw out there. And then for this panel at TMAC, we want to ask questions of them so we can get those answers that maybe we've been something, I don't want to put thoughts in your questions.
How much business does C2 do with TMAC?
Good question.
It's probably about 80%, would you say that?
Yeah, 70, I'd say 70 to 80%.
70 to 80.
Of our loans. Now, are we one of your largest brokers that's in new business?
Yeah. Yeah.
For sure. Any other questions you might have for this panel?
Yeah, so we offer a jumbo reverse program that's essentially another lender's program that's white labeled. So it's probably inefficient for you guys to go to us for a jumbo because it's
you
on.
put that a little
Oh,
closer?
is that better?
Yes.
Yeah. Okay. Sorry. Yeah. So it's probably inefficient to go to us for a jumbo. It would be because we would just be brokering it out ourselves or acting as a principal agent.
It was Shane or I who talked about jumbo.
Yes, but good question, because T-Mac's really not the jumbo place. This is our Heckham home, Heckham shop.
Yeah,
good
and
question.
we from the very beginning, we've been laser focused on Heckhams. We want to make the Heckham program a better program. So that's why being in a jumbo program seemed like a deviation from our mission.
Any other questions? Shout them out.
General question. Do you all believe that the universe, the American population, thinks that reverse mortgages are a scam still?
Yes. Yes, still.
If you hadn't heard that question, does the American population think they're a scam?
I don't
Reverses.
think it's a scam. I know Heckham isn't a scam. Why do we believe that?
Media, lack of education. And so that's why we like partnering with a company like C2 is because C2 believes in education. It gives you all the right tools to go out to borrowers and change the reputation of the product. Because we've all seen like how valuable it can be. It just is misunderstood, in my opinion.
Follow-up question, and I'll shut up. What percentage of our business, when we walk in and the homeowner, or usually it's the heirs probably, believe that a reverse mortgage is a snake oil deal today? 9 out of 10. 9 out of 10. Anybody else? That's the general answer from the
Yeah.
population?
9.9 out of 10.
That, yeah.
Angela.
Thank you very much.
What? Say that again? Yes, we'll repeat the question back from now on. What was your question, Angela? That was your comment, okay. That was a comment, we got that one. Do you lend in all states?
Most states. So we're, do you know the exact number?
Yeah, I think.
They're in every state that C2's in, I know that.
Yeah, so I mean, we're in every state except for New York, which I know we're working on, but like Indiana. I mean, the states that you typically wouldn't see reverse mortgages in, we're in every state except for the very small minor states that you typically wouldn't do a lot of volume in.
Yeah.
Sorry, I know that's not exactly, sorry, Brett. I know that's not the exact answer, but it's, I want to say it's like 42, 43 states. Oh, Elisa back there, our CFO, just said 44 states. So.
We
And
should have
we're-
brought her up here.
And we continue to add more states. So our goal is to get to 50.
Yes, in the back.
Typically, what's the sweet spot in terms of loan to value for a reverse mortgage? I'm trying to do them before I came to C2, and I thought it was a lot of meat on the bone, and the people had to bring in a lot of cash.
So what is the sweet spot right now for loan to value? We call that a little bit different in the reverse world, but what's the sweet spot, you think?
Well, that's a great question. Honestly, it's because the 10-year treasury has fluctuated so much, it's going to depend on the margin you choose and what the 10-year treasury is for that week. So during the pandemic, where the 10-year treasury basically stayed the same for almost 2 years, we could tell you what the sweet spot was. But now, due to the age of the borrower, the value of the home, where the 10-year is, and what margin you put them in, those are the 4 factors that are going to make it up. So it's so honestly, it's almost impossible to say what a sweet spot is. It's a moving target every week.
30 to 35%
Right now.
right now. Just in 30 to 35%. But if you go to the Blue Door portal, go under tools, go down to the bottom to the HUD principal limit factor tables. There's an explanation of how to use them, and you can look it up for anything without going to the closet.
So what can we do as an industry to change this negative perception?
So Todd asked,
Everyone agrees that 9 out of 10, or what was it? 9.9. Thank you, Brian. One of our top producers, 9.9 out of 10. What? Everyone knows this.
so what can we do to change the negative perception?
Yeah, what are we going to do?
Shoot Dave Ramsey.
Well, I guess from my perspective, I think education is extremely important. And then I also think that we need to offer the right loan to the right person. So we have to offer reverse mortgages when they make sense. And I think from what TMAC can do is not only offer education, but we can also offer very good pricing. So as a lean organization, we can offer pricing such that margins, you can offer lower margins and still make money. And that helps, that helps the, in the end, it lowers the cost of the loan and makes it a smart financial product.
I think the right loan to the right person is a great idea. That's just.
Well, keep thinking of your questions. I have a couple I'm going to do because I want to really understand. We could talk about this industry a lot, but we have TMAC here, and I really want us to understand some things about this partnership that makes sense. I'll come right to you, Elon, in just a second. But why TMAC? Why would we choose to work with you when we have a lot of other investors?
Yeah, I'll take that one. Or Melissa, did you want to say
No,
something? Oh, okay. So,
I got you.
I mean, listen, I've been in the industry since 2006. I did my first deal with James B. Nutter, if you guys remember who that was, and then Bank of America, and so forth. And so I'll say, I'm not just biased because I work here, but TMAC is by far the best reverse lender I've ever worked with, I've ever submitted deals to for a number of reasons. Number one, you can talk directly with, and I know all of you wish she was here, which we do, is Carmelon. Carmelon's amazing, and if she was here, you can have direct access to her. Our underwriters will actually speak with the brokers if you want to. They make time to speak with you guys and make sure you understand this is why we asked for this condition. This is maybe what we can do to make it work. Our internal staff is fantastic. Our turn times on FHA case numbers are really fast. Our closers typically will tell you 48 hours, but a lot of times we'll say, hey, if we need to do 24 hours, we can. So what I love about TMAC and what you guys should love is how flexible we are. We don't have a rigid system where it's take it or leave it. And then probably the best thing, you guys, is pricing. Brett and Elise have worked really hard to make sure the company stays lean so we can offer the best pricing. And yes, I realize pricing is not everything, but it sure helps because you are able to offer the lower margins, like Brett said, and be a lot more competitive than most lenders. So Shane, I'd love to hear Brett and Jeff's, but that's from my perspective why TMAC.
Yep.
Yeah, I think one thing to add to that is we also believe in making the product better. So one thing that we can do as an industry, in my opinion, is to lower barriers to refinance. Because if someone gets stuck with a loan that they, maybe they didn't shop around enough the first time, I think it's important that they have the opportunity to refinance and get a market level rate. So, from the very beginning, TMAC has always been supportive of making the product refinanceable, especially because there's a little shopping around.
What is the time frame for a refinance?
Right now, our policy is 6 months, but it's a bit unclear if that's even a HUD requirement, so it could potentially be lower.
I want to enhance that a little bit. Nirmalas came out in 2015 with ethical refinance guidelines, 5 times closing costs minimum, 5% increase in benefit. Ignore those, all right? What Brett's saying is look at what's best for the borrower, and if you think the numbers work, call Nathan, have him look at it, they'll do the deal.
Yeah, we
Yep.
close loans all the time that may not meet the NRMLA guidance, but it makes sense, right? You look at the deal, it makes sense for the consumer. We're lowering the rate, we're giving them more, proceeds. If the deal makes sense, we'll take a look at it on an individual basis, and we're approving refis that make sense that may not meet the NRMLA tests.
Melissa, down that same line for you, why does our team like working with TMAC? What makes us choose TMAC often?
So I came over here from a lender, Fairway, where we had a full team of everybody. And so when I came, I didn't have a team at all. and we really didn't know what we were doing. So I was reaching out to anybody for some type of help or some type of guidance of what to do. And I got shut down by a lot of different lenders until I got Nathan. Now you're gonna make me cry. He helped me, Carmelon helped me. Like Shane and I both wouldn't be here if it wasn't for the help, because I didn't know what I was doing, and I thought I did, but not from the broker side. So now with Carmelon and Nathan and work with them as a team is why, I feel like I work for TMAC just as much as I work for C2, because we work all together as a team. So that's why.
That's great. Elon, your question earlier.
So, is your corporate team the final decision maker on the loan, or do you ever have to send anything out elsewhere, like FHA or something?
Is this corporate team the final decision maker on a loan, or do they have to go to FHA or someone else for guidance?
Yeah, we're the final decision. And so that's one advantage of being a small company, small family-owned company, is that we can make very quick decisions and do the right thing.
So I got a couple others. I want to always work to get better, and that's what today's about. Today we try to bring more content, more meat. Do not leave after lunch, even though the financial advisor is coming in. We're just going to go deeper into more meat. I had a few people think, we got to go during this. Can we handle it? We're going to go a little deeper, and Dr. Wade Fowle is going to go pretty darn deep. And he's going to talk about some terms like sequence of return risk and different things. You may not understand every word he's saying, because I know I didn't. It took me twice to read his book, and I went to school in finance. Of the speakers up here, I'm by far the, I'm the least educated. I can tell you, I don't have a PhD. But I can tell you his information, what we're going to learn this afternoon, is invaluable. But we want to get better. So when I think of getting better, I want to ask the panel here, what can we do together, TMAC C2, to improve?
So
That's a tough-
from my perspective, I think Brett said we get 80%. We'd like 100%. Just send it all, except for the jumbos. Just send it all. No, I mean, from our perspective, at least from my perspective, I don't want to, Brett or Jeff, but I mean, C2, as I was telling Scott and actually Shane earlier yesterday, this is a very well-run reverse division. It's probably the most educated. The deals that we see come through are fantastic. They're clean. It's just a really good run operation. So, I mean, Shane, I'm being honest. I don't really know what C2 could do better from a TMAC perspective. Now, from a TMAC perspective, we're always happy to do better from a lender. But as far as that, I'm not sure what C2 could do better, except for send us more deals.
I had a conversation with one of our loan officers yesterday that said he sent his last few deals to Longbridge instead of TMAC because Longbridge comes back with way fewer conditions. And part of it is Longbridge only lists the conditions the loan officer and processor are responsible for. Where it seems like the TMAC conditions are kind of endless because it has like the TMAC conditions and the loan officer and the processor. Is that something you could improve?
I'm not going to repeat all that back.
Yeah, we've heard that feedback before. It's not unique to C2. We've done some improvements, and we continue to try and improve. We've tried to reorganize the way some of our conditions are on the report. Shane said it the other day, if you speak TMAC, it's great, right? Like you sit down and you actually read the approval, it's like, oh, there's not that much here. But when you first look at it, you go, 14 conditions. Like, why do I have 14 conditions, So some of
I remember
them are
the first time we got 14, we felt good.
Yeah. Right. That's an improvement. So that is something that we've heard from several partners. So we are working on that. We've taken some of the generic stuff, some of the things with disclosures. We've tried to redisclose a little bit less. We were a little bit redisclosure happy. Anytime anything changed, the wind blew differently. Well, let's redisclose the loan, right? So things like that, we're trying to chip away and slowly get a little bit better there. I will say we closed, I'm aware of at least 8 or 10 loans that we closed in less than 10 days in February. We had a good February. So That happens with clean approvals. That happens with, kind of like garbage in, garbage out, the cleaner the approval that comes in. And this is just in general, not C2. But as far as, the earlier question about, what we can do, in my experience, I've been in AE for about 8 years, and I used to originate reverses for about 8 years before that. So about 16 all in. And I really like the partnership, right? This isn't a transactional thing. You're not going to send us one loan and then never talk to us. So I like feedback, good and bad. It's always great to say, oh, Sally did this, Joey did that, that was wonderful. But, room for improvement, right? You guys are out there. You guys are dealing, mostly with us, but you're dealing with other, investors too. And if you see something that somebody else is doing, hey, that's really good. We like that. That's working. We love that feedback too, right? We depend on you to give us feedback so we can continue to improve what we do. So I think the whole partnership, which has been, talked about a little bit, I think it's really important and something to continue.
Thank you. I've got 2 key questions that get asked a lot. So we're going to do this real fast and we'll take more. These get asked a lot, so we got to make sure we cover them. We only have like 5 minutes left. So that said, I'm going to ask this one. Get asked a lot where to go. Where do you go if you have a scenario question, an issue? You need to know, hey, what do I do here? Do I have a deal? I need a general reverse question. Who do we call? What do we do?
So we have a great help desk. Our help desk email is fantastic. They respond immediately, well, pretty quick. And then always just feel free to always call or copy me on that email. Of course, Jeff is always available as well. But if you have any scenarios, just call me or the help desk. They're very efficient.
I'm sure every loan officer in this room wants to know this one. And it's about pricing. I know price is not everything. That's definitely not. Me and you, Brett, we've talked about that a lot. I think value has to do a lot more than just pricing. But we love that TMAC is always competitive in pricing. I know that your commitment to always be there. And you have been. But what if we went to take the loan to Longbridge or another investor, and would you guys be willing to look at any deal to see if you'd at least match another investor if you weren't the best priced?
Yeah, absolutely. Yeah, I'd be happy to look at any deal. Yep.
That's great. It's good to know. Carl.
Quick question. I just fortunately closed one with you guys last week. Real excited about that. I was a little confused. TMAC versus, what is it, the Good Life Company was on a bunch of the docs. That kind of came out of nowhere when I was disclosing to my client. What's the relationship with that TMAC?
What's the relationship between Good Life and TMAC?
Yeah, so Good Life Home Loans is TMAC's retail division. So we have a very small retail group at the moment. It's only 2 loan officers. We've had the brand for a while. It's kind of a placeholder for future growth. But that's essentially what it is. It's just a DBA.
So that leads me to the potential for a refinance market hits. Is there a non-compete clause or something that would make it so that way your retail division?
Good question. If the refi boom hits, basically, are they going to go after our clients? Can I say it more plain than that question? Are you going to go after our clients?
Yeah, so we will, but any lender will, okay? And so the way we go after it is like direct mail, and because portfolio, if you own the servicing, portfolio retention is very important. So if we were to not go after, if we weren't to market to our portfolio at all, there would be a significant cost to that, and we wouldn't be able to offer good pricing. We just wouldn't be competitive. But we believe that the most efficient way to get the refinance done is with the original loan officer. So we have very lenient policies on C2 doing refinances themselves. We don't have a non-solicitation clause like a lot of lenders do. So we're here to support you guys, and to the extent you refinance the loan yourself and send it back to TMAC, that's a win-win.
Is there going to be a better pricing for your in-house loan officers than for us because you currently uphold the servicing?
No. Yeah. It's not, it's, at the end of the day, it's only two loan officers, and it's just like general, yeah. It's, just very basic marketing to the servicing portfolio.
57-year-old and a 65-year-old. I want to pull the 57-year-old off, and they're both on title, married couple.
So you have a 57-year-old,
I have a 57-year-old and a 65-year-old.
65-year-old.
Yeah, and I'd like to hold the 57, and the 57-year-old is willing to go off title.
They can remain on,
Yeah.
they can't be a borrower.
Right.
But they're married and living together?
They
We
may not, but they're eligible.
Cor-
Repeat that, Shane.
Okay, so I got a 57-year-old and a 65-year-old. Are they married?
Yes.
Married couple. You're asking, can I take the 57-year-old off title and not put them on the loan?
What state is it in? California? Okay. Yeah, no, like Jeff said, I mean, they'll remain on title. They'll be an eligible non-borrowing spouse is what they'll be. Because they're not 62.
But it's, okay, that's on a HECM. I can't do it on a proprietary, I've already have. But could I do it on a HECM?
She would be they would still have to go off of the age of the 57. If she's not,
I understand, they would still have.
they would still have to go off the age, because unless she doesn't live in the house or the spouse doesn't live in the house and you can prove the taxes are not filed there, then you cannot use that age.
You can't make an eligible non-borrowing spouse ineligible.
Yeah.
You can't make an ineligible non-borrowing spouse eligible, and Dan Holquist taught me that.
Brigitte. Brigitte.
I have a quick question. With the insurance crisis in California, how is TMAC managing the homeowners association's master policies these days on condos?
So how is TMAC handling the master policies on the HOAs and on condos?
We might have to call Carmel.
Yeah,
Yeah.
I don't want to answer that.
That's a great question.
It's a challenge, but yeah, that would be a help desk question.
So
Like they do.
you might put the mic.
Help desk. Carmel
Yeah.
Carmelon on the help desk would probably be able to answer that
It's
question.
above these guys' pay grade.
Yeah.
Do you have a condo department that just handles condo certs?
No, okay, no.
Repeat
Well,
that back, would you?
yeah, so she asked if we had a condo department that handles the certs. No, I mean, we'll do now, I know it's a little different. We'll handle your single unit approval condos, but as far as like a condo department that does nothing but that, we don't. Carmelon and Gretchen kind of just do that. That's just part of what their daily activities are, so yeah.
Carl.
And Nathan can maybe clarify this, but I actually had a TMAC, a retailer, cold call a loan that I actually did with TMAC. And Nathan, you remember our conversation, and you were pretty articulate, and you recognized the loan officer who cold called him.
Repeat that back.
So yeah, you're gonna have to remind me. I mean, so
Yeah, so
tell me
I
again.
closed the loan, and maybe 3 or 4 months later, I got a call from the borrower saying, hey, Good Life Home Loan called me and said, I'm from your lender and I can help you out by X, Y, and Z. And I mentioned the loan officer to you, and you go, oh yeah, he's on our staff, he's wonderful. So you say, but we don't actively pursue your borrowers.
Oh, I see. Yes, I do remember. Yeah. So what he's referring to is kind of the question earlier, where I mean, to Brett's point, I think to Brett's point, of course, there's that general marketing that goes out to a service portfolio you own. But I mean, as soon as we found out it was one of your clients, we talked to the loan officer, and I mean, everything worked out great because it's certainly not our intention to go after specifically anybody's clients. Is that what you're specifically referring to?
Statistical anomaly is what it was.
Yes.
Well, I'm going to speak to that for just a minute because me and Brett have talked about that a lot. He knows that's been a top topic with us.
Yeah.
And we're in a broker world. Brokers, we do not want our clients being taken, and that's one reason we love UWM so much, right? We know they're not going to come after our clients. They commit to it because they moved out of the retail space. Now, Good Life, I know Brett, I don't believe he's downplaying the fact that Good Life Home Loans is not the focus of their company. The focus of their company is the TMAC side. They have a couple loan officers, they do them. It does give them the licensing and things they need. But before I take that question, understand that every investor we go to in the reverse space is wanting to keep that loan, keep that servicing. Some of them are going to be very aggressive at going after your clients. They are telling us they're not very aggressive. But I will say this. I've experienced working with them all this time. I think they're moving in the right direction to understand. We've talked about that, me and Brett have, and how important that is to us and how important that is to our partnership. And when it comes down to retainage and keeping the business, as those markets drop, don't worry about TMAC as much as every other loan officer. Because you know how many loan officers are going to call and say, I'm from Good Life Home Loans? Because they can look who's on deed, and they do it all the time. So it's not Good Life Home Loans calling. When I worked at Fairway and we closed our loans with Longbridge, let's say, people will call up and say, Fairway, Longbridge, wherever they needed to try to get the business. The people are going to get tons of ads. So stay in front of your clients. Don't just depend on the fact that TMAC or Good Life's not going to go after them. But let me tell you a success story. We are licensed in the state of North Carolina. But we cannot do reverse mortgages in North Carolina because North Carolina does not allow brokers to do them. I found this out in the middle of a loan. And we were 1% better in rate on the margin than the quote. It was $80,000 difference to the client. $80,000. And I got our AIM rep to help us go after the state of North Carolina to show them the difference. We couldn't do it. But I called up this guy and this guy. This guy in 10 seconds got me over to one of their guys at Good Life, and they were able to help us. And we will be closing that loan here in June because we're waiting for some seasoning. And they're going to do the loan and match that price and help that client. Okay, that's a win. We have a partner here that can help us. In the end, I could care less about doing a loan more than not letting the guy get taken advantage of. I wanted to say some other words there. Of $80,000. So I know we're running out of time. We have lunch. We have the advisors coming. We have more rooms here. Do not leave. We will have time at the end for more questions and answers and general questions at the end. We're leaving time for that. But do not leave. We want to make sure that we have room for these guys. So if you have a bunch of trash and junk, we're asking if you didn't invite an advisor, if you didn't invite somebody, don't leave. You don't have to leave because of that, but we don't want these advisors and the different professionals coming in not have a place to sit. So we are asking you kind of clean up a little bit, and then we're going to get everybody back down. If we need to bring in more chairs, we will. But if everybody shows up that said they would, with how many are here, it's going to be snug.
Real quick, before we all split.
Thank you, guys.
Thank you very much.
Thank you.
Matt.
Thank you. Thank you.